Hey friends, I want to remind you about the Negotiation Made Simple live workshop that is coming up April 29th and 30th right here in Nashville, Tennessee. There are three things that you'll get out of this workshop. Number one, you will use these skills every day of your career. Number two, you're going to become better at putting deals together. And you're going to be able to figure out how to capture more value in those deals. And then lastly, you will become more skilled in terms of dealing with people. Whether it's solving a problem, whether it's trying to pursue a business opportunity with them, whether it's putting together a partnership, this workshop will give you skills in terms of how to connect with people, how to understand what drives people and their decisions, and then how to create the kind of trusted relationship that is great for doing good in the world with other people. Come join us. The way to register, really simple. LowryGroup.net. If you'll go there, that's where you can register. And we hope that you will come join an amazing group of people from around the country and be with us for the Negotiation Made Simple live workshop. Welcome to the Negotiation Made Simple podcast, where we help you master the art of negotiation and win the next deal. I'm excited about this episode with my friend Aaron Dorn, the CEO of Studio Bank here in Nashville, Tennessee. Aaron has an incredible story about how he started his career as a banker. He interrupted his career to go serve in the U.S. Marines, learned a ton about leadership during his time in military service and his time serving in Afghanistan, came back and resumed his business career. And in doing that, through his 30s, launched a new bank, de novo, from scratch, Studio Bank, that is now a billion-dollar bank right here in Nashville. Now, through this story, Aaron learned a ton. Learned a lot about how to work with people, learned a lot about how to put deals together, learned a lot about how to advance business relationships. And he is here to share that with us today on the Negotiation Made Simple podcast. Let's jump into our conversation with Aaron Dorn, the CEO of Studio Bank. Aaron Dorn, it's been a long time, my friend. I'm really excited to have you on the Negotiation Made Simple podcast. Thanks for being here today.
What a privilege. I can't wait to talk negotiation with you.
Well, this will be fun to kind of catch up. We haven't spoken in a while, but you've been busy building Studio Bank. Tell us a little bit about the bank.
Just a little bit busy. We are a de novo bank. What that means is a bank with a brand new charter that we started from scratch. We didn't just raise capital to acquire a bank. We actually went through the regulatory application process from start to finish to form a brand new bank. We did that going on 7 years ago, coming up in June. It'll be 7 years. We've grown to be about $1 billion in assets. We got profitable after 2 years, which was our target, have been profitable ever since. And we've navigated some wild and crazy times, if you think back over the last 7 years, with the first Chinese trade war that happened, followed by the pandemic, followed by a mortgage boom and a mortgage bust and rate shock and inverted yield curve for a long time. And now the latest salvos in a global trade war and interest rates going crazy. So we have navigated through some crazy times, but we've done it successfully and have built $1 billion bank in that time.
Well, that's an incredible accomplishment. And, as they say, like, entrepreneurship's not a straight line. Even though your business plan kind of lays it out that way, the reality is it goes this way, it goes that way, and you got to become resilient. And that becomes really the essence of what makes you successful, is the team that you've built and how resilient they are. So that's a great testament in terms of you and your outstanding team being able to generate so much success with all of the different obstacles and all the world events that make things a little more difficult.
It's funny you say it's never a straight line. It truly is not. However, after 6 years, we did look back at our original forecast. We did a 6-year forecast. And we looked at that final quarter of the 6-year forecast and compared it to where we actually were. And in spite of all that crazy nonlinear stuff that we had to navigate through, somehow almost every material line item on our balance sheet and income statement was spot on within about 5-10%.
Wow.
So it happened very differently than we ever imagined, and it unfolded not linearly in that sense, but fits and spurts and things like that. But somehow after 6 years, we ended up right where we said we would be.
Well, one of the things that makes Studio Bank special, I know part of the origins of that really come out of when we met when you were at Avenue Bank.
Yeah.
And you were in charge of retail banking. And Avenue was really focused on creating kind of a different experience for people. Talk a little bit about that and how you've carried that over to Studio Bank.
Yeah, I was fortunate enough as a 25-year-old to be a part of the founding team of Avenue, and really had a great example and mentor to follow in Ron Samuels and Kent Cleaver and Andy Motes, the folks that were involved from the very beginning. Van Tucker, who recently passed as well. Van was a great blessing to me in that time. And Avenue was exactly what you said. We tried to create a really unparalleled client experience, and we served a lot of different industries. Actually, we were known for, probably best known for our music and entertainment focus, but we were a well diversified bank. That bank grew to about $1 billion and sold to a large local competitor, and so in looking at starting Studio Bank, I certainly carried the Avenue DNA with me, and my DNA was a bit in Avenue. And so there were a lot of lessons learned from doing that. For all of us involved in Avenue, that was our first time starting a bank. None of us had ever done it. And so lessons learned along the way. And so Studio represents really some of the best lessons from Avenue, but also incorporating a lot of the harder lessons that we learned, and incorporating a lot of the best lessons from several other competitors that were de novo banks in the early 2000s, such as Pinnacle and Capstar, Franklin Synergy Bank, and a few others. So we really tried to be as intentional as we could be studying other de novo banks. And so our DNA is this wonderful blend of certainly the client experience focus, the brand and marketing focus of Avenue, but also a lot of the back end business and operational focus of some of these other successful de novo banks from the past.
And so for people listening around the country or around the world, these are all kind of Nashville banks that Aaron is talking about. And Nashville's got a pretty intense banking scene to support what is a very robust economy here. But Aaron, I want to turn to kind of your leadership journey personally. You talked about being kind of a 25-year-old young banking executive. You started Studio Bank at a very young age. Talk a little bit about how you've been able to learn leadership at such an accelerated way to where you've been able to accomplish so much from a leadership perspective at such a young age.
Well, I always want to start out by saying I'm still learning just like everyone else.
Sure.
And I think the acceleration of, I would say, my responsibilities or my outlook on leadership, it really began at an early age. I put myself in positions while as early as high school and college, just taking the initiative to put myself in positions where I had to develop those skills or the mentality for it. I was fortunate enough early in my career, like I said, to have a few great mentors and examples to study and follow. And that certainly played a big role. I mentioned a few of them earlier. And then when I was, what age was I? 27 years old. It's a very long story, but I essentially had a calling that I followed to go and join the United States Marine Corps. Part of that calling, a part of that tug, that urge to go do that, was recognizing and learning about the incredible leadership development indoctrination that happens for Marine Corps officers. And I wanted that. That was a big component to it. It wasn't the only component. And so I did and became a Marine officer for 4 years. I actually stepped away from Avenue Bank after 3 years and served in the Marine Corps. And that had an absolutely life-changing, formative effect on my mentality and skill set when it comes to leadership that I carried back with me when I got out of the Marine Corps after 4 years. I served in Afghanistan. By the end of my 4-year tour, by that point, President Obama started drawing down troops out of Afghanistan. And Avenue Bank had a senior leadership position available that they wanted me to come back and fill. And so I brought that experience back to Avenue as you mentioned, the head of retail banking, but also marketing and strategic planning and special projects. And that certainly, having the civilian experience and leadership combined with the military experience was a wonderful blend to bring back to the business world. And undoubtedly, those experiences have enabled us to be successful at Studio Bank and allowed me to be the leader that I need to be for this startup, high growth banking company.
Sure. Well, we're grateful for your service to our country. Talk a little bit in more detail about some of those lessons that you brought back to Avenue Bank from your military service.
So the Marine Corps is very deliberate about teaching and instilling in a leader, in an officer, and I would include staff NCOs in this as well. What are the characteristics and traits of strong leaders? And so you've got the 11 leadership principles, the 14 leadership traits. They indoctrinate you into those things. They also evaluate you. To become a Marine officer, it is a tryout. And 40% at least of my class was cut for various reasons. And so it is a tryout. You are evaluated. It forces you to practice those things. And so then you get to what I call the real Marine Corps. You get to the fleet, as we say. You check into your unit, and next thing you know, you're deploying or you're training out in the field with them. By that point, it should be something that you don't even have to think about. There's a culture and an ethos that sets in. And so some of those mentalities, I could, like I said, there's dozens of them. But some of the big ones are, leading by example. Everyone talks about that. But what does that actually mean in your day-to-day life? Are you the first one to show up to the office? Are you the last one to leave? There was a phrase that we would use called leaders eat last, meaning when you're in the chow line, the leaders don't eat until everyone else in the unit has gone through the chow line. When it comes to wearing the Marine Corps uniform, Marines are very proud of their uniform. A lot of men have bled and died for that uniform. And so we wear it with pride. You've probably seen it in movies and
sure.
Crisp, starch. So setting the example, leading by example is one of the first and foremost of those principles. And there's many, many more that I could dive into, but that's probably the highest and best. And then creating culture, esprit de corps. That's another big one is you learn all the different components that go into creating a really strong unit level culture. And as you can imagine, starting a company, especially I always say a startup bank is like a startup on steroids because of all the capital and people and policies and regulation that you have to be prepared for. But you have to create a culture in the midst of all of that complexity and a culture that makes everyone really excited to go take on that startup on steroids and make it successful. And so you definitely learn that in the Marine Corps as well as how to create that kind of all for one and one for all esprit de corps, mission accomplishment focus.
That's great. That is great. So in the process of doing all that and building the bank, you've had to put a lot of deals together. And that's where I want to spend a good chunk of our time talking today is what you've learned specifically in terms of, how deals come together. What do you see? I just want to jump into the kind of that whole subject area. And so let's start with really thinking about, as you think about the people components in terms of putting deals together. And, in the banking world, you all are doing deals with clients all the time. You're in the middle of deals that clients are trying to execute where, you might be underwriting those deals or you're involved in the financing of those deals. One way or another, you're working around deals kind of all of the time. And so let's start with just kind of thinking about the people components first. What are some of the things that you see that cause people to want to move forward with a deal? And what are some of the things that you see people want to back up from a deal or want to step away from a deal? What are some of those kind of people, personal kind of components that you see come to play as you're doing business?
Yeah, so all of the things that you mentioned, certainly, I would add recruiting to that list.
Yeah,
Every
sure.
time, we're high growth and therefore high recruiting, and that's always its own version of a deal that comes together. The first thing that comes to mind in terms of the people component is you have to have a mutual idea of what each side of that deal is trying to accomplish. And in some cases, people are not as clear about it, and they're making decisions emotionally or on a whim to some extent, and others are much more clear. And so having clarity on understanding both sides of the equation. So if I'm on one side of the table, somebody else is on the other, I need to understand really what they're trying to accomplish ultimately by talking with me or by meeting with my bank. And I also need to have clarity about what I'm trying to accomplish. Determining what the ultimate goal is, it sounds so simple, it sounds so basic, but few people start from that point. They usually jump into the details of a deal or jump in straight into the, I would say, the less relevant or less influential components of a deal. But if you can slow down, in the Marines, we would call it a tactical pause at the beginning of conversations and try to understand truly what somebody's trying to accomplish. That allows you to put all of the other deal points in the proper context with the proper weight of emphasis. So there's that. The other is building trust. In banking in particular, we're not just selling a product. It's not as simple as buy the widget that I'm selling and move on with your life. We're in a business model that's much more what I call enrollment based. So if you're borrowing money from us, you're probably signing up for more of a longer term relationship. If you're putting your deposits with us, it's a pain to try to move those deposits, right? So you're enrolling in something, in a service that we provide, in addition to the products that we offer. And so in that sense, it's much more important in our business to develop real trust with the person with whom you're doing business. If I'm extending a loan to a person or a business, I need to know that they're going to pay me back. I'm not in the business of making loans that don't get paid back.
Sure.
And on the other side, they need to know that they're in the hands of a financial institution that is safe, sound, stable, and is not going to pull the rug out from under them on their loan at the least little thing that might happen, because life does happen. And so there's that level of mutual trust that has to come into an enrollment-based negotiation that may be a bit different from other industries. And so for us, it's how do we build that trust with each other in sometimes a short period of time and understand each other's mutual goals in the negotiation that may be about to happen. Those are I would say the front end, the two most important components to the people element.
So that's really well said. To put that into the negotiation made simple language, this reminds me of this idea that I present about transitioning from positions. And so many people want to start the negotiation with their position and outlining their position. And that's different than what they're really trying to achieve in the negotiation. The position is how they're going to get there in terms of the substance of the deal. And that's where a lot of people start. But I love what you're saying in terms of that tactical pause to say, let's go one level down and let's think about what we're really trying to accomplish. And then we can take our respective positions in terms of how we get there and start having that conversation. And what that does is the positions become very adversarial very quickly, because many times the positions don't align perfectly. And so what happens is, and to your second point about trust, is if you start at that place to where we're thinking about what we're both trying to accomplish, and then we start thinking together, even through the process, trust gets built.
Yep.
Just because of the way that the conversation goes. And that makes it easier to kind of get to a deal and to make that happen, which I think is brilliant. So let me ask you this question that's specific to banking, because I think it's unique. But I also think it reveals something about people that's really interesting. So in banking, you said, people are borrowing money. There's a lot of different banks that have money to loan.
Yeah.
And, at the end of the day, every single day, people end up doing business with a bank that is not the absolute lowest interest rate that they could achieve in terms of their loan, or may not be the bank that's providing them the highest interest rate in terms of their deposits and the return.
Right.
And so what is it that causes people to want to do business with a bank that is not delivering the absolute best terms available just on the interest rate on the money?
That is an excellent question. And that is something that we talk internally about all the time. You can imagine in starting a new bank, a frequent question that others would ask me, not much less I'm asking myself, is what is the real value proposition that I'm bringing to market that is unique? Any startup should ask that question.
Sure.
And not only what is the value proposition I'm bringing that's unique, but unique and valuable that someone would actually be willing to pay for. And how our clients and our business pay for it is exactly what you said. That little bit more on the loan rate than maybe some low cost competition, or the opposite on deposits. And in our case, what we find is that the answer is different for various types of clients. And so you have certain clients. So banks can't get away with just simply one value proposition. If that were the case, you would have a very homogenous client base. And we want a very diverse client base, which means we're going to have diverse sets of, in business school language, it would be order qualifiers and order winners. What are the things that they decide to bank with us on? What are those components? And what we find is that some clients, it may simply be that they love that we're a local bank, and they want to invest their deposits and take out their loans from a company that's fully deploying these funds in and out of the market that we're living and working in. For some, it may be agility, the ability to move quickly, to be creative, to help them get accomplished whatever it is they're trying to accomplish in a quick and somewhat creative way. Not, as you probably all know, not every bank is agile. Not every bank is quite creative. They're very policy-based. And so for some, that's really important. For others, it could be products. It could be the sophistication of our technology that we provide. It could be maybe the pricing on some of those products, but not all of them. And then finally, we have a unique value proposition we try to bring to the table where we are connectors for our clients. So if you're a small business owner or in the commercial real estate space, where a lot of your opportunities come through networking, if we can help provide those opportunities and drive revenue to your company, then that creates a value proposition far beyond an interest rate or a fee. And so we have to tailor our value proposition to the client and what it is they're trying to accomplish. So it goes back to that last topic we were discussing about really trying to understand on both sides of the table what somebody's trying to accomplish and how we can help each other get there.
Yeah, what this raises that I think is so interesting is, there are lots of different motivations that people have when it comes to business.
Yep.
And so many of those motivations are these intangible personal things. It's not just what's the absolute best deal substantively, and I'm going with that one all the time.
Yep.
And, what we learn is that doesn't happen. Like, people have different reasons. For me, in the Avenue Bank experience that you designed back in the day, the most interesting thing and compelling thing about Avenue Bank is when I walked in to make a deposit or to make a withdrawal, I didn't have to give my social security number in front of everyone in the bank. I didn't have to show, all the ID and my cards and run my ATM card and do all these things. Like, I could simply, and I don't know what the process was, but whoever the teller was was able to understand who I was very quickly and be able to help me without just a litany of proof in terms of this. And I'm sure that was well designed, but I always thought, like, it's so easy when they come in and they're like, they can look at the check, look at the account and say, oh, Mr. Lowry, as opposed to, prove it to me.
Yeah, they know who you are. And we hired people who could remember who you are.
Yeah.
And we hired a certain way to try to deliver that very experience.
Sure.
Because there are some personalities who are naturally going to be oriented towards that and others that are not. But that's a great example because that was important to you. We had other retail clients who loved the fact that we baked fresh baked cookies in the branch every day.
Yeah.
They would come for the cookies. And that was the unique value proposition for them was that they loved the fresh baked cookies. And so that's a great example of different clients need different things. And we have to figure out what are the most valuable of those things and deliver that.
So let's move and talk about the process a little bit. And really what I'm interested in is your observations in terms of deal momentum. And, many of the deals that you're involved in are complex deals. Talk about the importance of deal momentum and the importance of an ease of process to get to a deal and the barriers that you see pop up when a deal becomes too complex, when there's too many barriers, and what that does in terms of the people and their motivation to go through with putting that deal together.
Yeah, the first observation I'll make is that it is totally dependent on the personalities of both sides of the table.
Okay.
There's sometimes where the person that I'm trying to do something with needs momentum that gives them confidence. The fact that there's momentum, they get excited. There's an emotional component to that, where in those cases, they often don't sweat the details. They don't mind if all the T's aren't crossed or the I's dotted and everything that they're trying to negotiate. There are others, however, who are much less risk tolerant. There are others who want to slow down and what gives them confidence is making sure that they are crossing all the T's, dotting all the I's. And so, again, you have to understand the person on the other side of the table, so to speak.
Sure.
And not only what are they trying to accomplish, but who are they? What gives them confidence? And so that's my first observation, is it totally depends on who's on the other side of it. Now, I tend to be someone who likes to ride right in the middle. I like us. We need to have some momentum, but I also want to set really clear expectations. We don't want surprises to pop up at the last minute, or much worse, after the deal is done. And so I like to ride right in the middle. And so I find myself either wanting to hurry someone up or wanting to slow someone down in the process. But that's just my own personal style. There is a value to momentum, without a doubt. There is a value to moving quickly, because the more time that elapses, the more opportunity for unexpected events, unexpected stakeholders to insert into it, whether that's lawyers or accountants or whoever. So there is a value to momentum, without a doubt, so long as you're not sacrificing clear expectations and so that there aren't surprises at the very end or after the fact. But it totally depends. I think some of the structures for how to do this is starting off with a bit of informal discussion and trying to, in a disciplined way, move it to the details at the right time, rather than trying to force the details early. Or you see what I'm getting at?
Sure.
There's an art to that momentum and making it flow the right way, but it's all deal dependent.
Yeah, I mean, what you just described there is kind of the levels of connectivity. We got to connect as people first. And there was a guy who taught me one time was trying to do a deal here in Nashville, and he was new to town, and he was meeting a bunch of people in Nashville. And one of the things he said is, he says, the reason why I'm taking so much time just to meet people is one of my beliefs is you can't do good business with bad people.
Yeah.
So he's like, I'm trying to figure out who the good people are that I want to do business with. And then once I get to that place in terms of identifying the kind of people I want to be in business with, then we'll get to a place where we can actually start talking about business. But I don't want to jump in talking about business before I know that they're the kind of people that I want to do business with. And so that level of connectivity that you describe in terms of connecting as people, then getting to the point where we're starting to connect in terms of the deal that's forming and eventually connecting over all the terms, that's how a lot of deals get done as I see it.
Absolutely. In banking and beyond banking. I mean, real estate deals happen that way often.
Sure.
But even within the deal, even once you've built the relationship and it's time to start talking brass tacks about, pricing, structure, all of those elements of the deal itself, there is still an element of momentum there where you've got to decide and the other side of the table needs to decide what are the hills we're willing to die on for this and what are the ones that we're not. And that having that kind of clarity early is what creates what allows for momentum. Because if you don't have that early, then if you start arguing over every little element of the deal, then you're gonna get bogged down and frustrated. And when both sides or one side gets frustrated, that makes the deal even less likely to come to fruition. And if you've started from a place of mutual understanding of where you want to head with this, then that allows you to maintain that momentum and limit the risk of frustrations or backing away. Because chances are, if you're working on a deal with somebody, one or both sides of the table are going to have alternatives. They'll have alternatives to go to.
Sure.
And if you're trying to consummate something with each other, you need to make sure that the appetite is still there after the negotiations, not just at the beginning.
Yeah.
And so, again, I think the momentum it is incredibly valuable, but it all goes back to the beginning and how you set up those conversations.
Yeah. And I've certainly had that experience. I think you raised something that's really interesting about kind of the motivation, not only to get the deal, but then creating the motivation within the deal to carry out the deal and the relationship. And I've had situations to where, negotiated a great deal, but it was such a good deal that the other side didn't have a whole lot of motivation to carry it forward. And so the vision of what was supposed to happen never really came to fruition, even though there was a deal in place, because the other side just wasn't motivated based on the terms of the deal.
And I think you're reminding me of mergers and acquisitions, right? The difference between an all cash deal and an all stock deal, right? If as let's say as the acquirer, if you're paying the acquired company in all stock, then theoretically they have a good bit of motivation, especially if it's a meaningful transaction.
Sure.
They have a good bit of motivation to make that stock worth more.
Sure.
If you're paying them in all cash, they've already been paid. And so what level of how are you going to create additional motivations beyond that one-time payment for the next 2 or 3 years or beyond to motivate them? So that's where those dynamics do end up coming into the literal components of the deal that's coming together. You want to make sure that structurally you're also creating those same incentives, not just emotionally, but structurally as well.
Yeah, great point. Great point. All right, a couple of different directions I want to go before we wrap up. First, you referenced kind of the frustration points. Like, what are the most common barriers that you see pop up that are deal killers?
The first that comes to mind immediately is miscommunication.
Okay.
Miscommunication. Often, you've got two sides of the table who communicate differently with each other. This is getting into inherent human personality and not just that, but experience as well. But one side not knowing how to communicate what's important to them, or forgetting to communicate certain important elements, or assuming that the other side of the table would naturally understand something that they may not naturally understand. And so that is often the case. I think about loans when a client and a banker are working on a loan and something gets frustrating, some expectation doesn't get met. It often comes from the fact that something was not communicated. There was an assumptive component to what they were talking about that was not communicated, and they were just on a different page.
Yeah.
So that is one. I would say miscommunication or lack of communication or not identifying an assumption. That's a big one. I think others would be how long it takes to get certain things done. You think of, let's say you set a closing date on a piece of real estate, and the banker says, yeah, we can close in 3-4 weeks or something. And then the appraisal takes forever. Or something pops up with the title, and you've got to figure out how to mitigate that title risk. There's all of these components that can pop up that take time. And if one side or both sides don't have realistic expectations about the time frame, then you start getting into a lot of frustration there as well. And then finally, surprises. Nobody likes surprises in a deal. And so if you've been holding your cards close to the vest too much and something comes out towards the end that threatens to blow the whole deal up, that is clearly something that drives people crazy as well. So lack of disclosure, I would say that's probably the appropriate level of disclosure. That's probably another one. That's the thing with negotiations and trying to get deals done. There are literally dozens of landmines, dozens of things that can pop up to lead one side or the other or both to be incredibly frustrated and not wanting to move forward, or not happy with the fact that they did move forward after the fact.
Yeah.
And so those are, I would just say, 3 common landmines that I see on a month-to-month kind of basis, working on lots of loans, and same thing with recruiting. It's a very similar set of circumstances.
Yeah. And one of the things, and whether you're doing a deal or you're just managing a relationship, whenever there's a problem, the key is to get control of the communication.
Yep.
And I think that's really, really important. One of the things that I've seen done that I think is really, really valuable, especially for folks that are trying to manage a client relationship, is say, look, here's the deal. Here's the process we're putting into place. But if there's anything that just doesn't seem right, here's my mobile number. Call me.
Yeah.
Call me. And that invitation, I found, saves me at times when I use that. And I've heard stories to where it saved other folks, to where it's like, we had no idea, and they picked up the phone and called, and we were able to work it out pretty easily. But I've seen so many situations where that didn't happen. And so that misunderstanding or that lack of communication, it ended up blowing the whole thing up.
Yep.
And so that, I think, is really, really important for people in our world of email, in our world of text, in our world of communicating without talking. There is still a moment where, if things aren't going right, having people pick up the phone and calling can be a deal saver, a client saver, and a business saver at times.
Absolutely. That's a component of building trust from the beginning. As you said,
Sure.
Look, hey, we're about to navigate a deal which may have lots of landmines.
Yep.
We need to covenant with each other that if something starts to fall apart, we will just make the phone call and we will talk, or we'll meet and eyeball to eyeball. That's a huge element of trust building and expectation setting as well. If you can make sure that the other side of the table knows that you don't have the unrealistic expectation that it'll all be smooth and hunky-dory, and that you're available and you're committed to the relationship. I'm committed enough to invite you to call me, and absolutely a huge trust builder at the beginning.
All right. So last question. So you manage a whole team of commercial bankers, and these folks are out there every day. They're hustling, they're building relationships, they're trying to find deals, they're trying to get money out the door, they're trying to bring new clients to the bank. What I want to ask you to do is to think about, and you don't need to say their name, but I want you to think about Studio Bank's best deal maker. Like who is the absolute go-to person that you as the CEO will turn to when you need a deal to happen and you need someone to kind of steward that process with that potential client or that business leader, whoever it is. And what I'd love for you to do is just to, without identifying them, just describe the traits of that person that you think cause them to be the best of the best in terms of making deals happen.
Absolutely. There are 2 or 3 that come to mind, and they have some commonalities actually across all of them. The first I would say, especially in our industry, is technical expertise. They know their business.
Okay.
And they've seen a lot. They've done a lot of deals. They've seen where the landmines are. They have experience and technical expertise so that the person on the other side of the table is dealing with someone who knows their stuff. That creates a lot of confidence to begin with, that this person will be able to deliver. The second is that they are really clear about expectation setting from the beginning. They are quick to say, nope, that's a deal killer from the very beginning. Or they're quick to say, absolutely, can do that all day long from the very beginning. They are quick at triaging. So what we like to say is the worst thing, worse than a no on a loan, for example, the only thing worse than a no is a long no. If you're evaluating something for a long time and time is just wasting, and then you end up saying no, it's much better to triage it quickly and tell that client, you know what, based on these things, here's the hot buttons. I don't think we're going to be able to get it done on these terms. We will be able to do it if it's on these terms. So that expectation setting and quick triaging also build trust because it's not just a human-to-human relationship. It is also an expert-to-expert type of relationship in banking with loans. Sure. And so in each of their cases, they know enough to be able to set expectations clearly, to triage quickly, to identify priorities to the other side. And that's part of what makes them respected by the clients. And the client knows that they're going to get a no BS kind of an answer from them. So that's a different type of trust building beyond the typical whining and dining and, building a personal relationship. Now, that said, each of these top bankers of ours are really good at building that kind of trust with people as well. Grabbing a beer, going to get a steak. They're really great at just personal relationship building and connecting with clients, whether that's on sports or music or whatever the case may be, the human level. And so in that respect, I keep coming back to this, but they're really good at managing things from the very beginning. Everything after that becomes a lot smoother. They are also incredibly hardworking. They will stick with that deal. They will work through it with you. They will go the extra mile and serve you really well as the counterparty. So that you never have a doubt that they are committed to representing the bank, but also working for you to get that deal done. And so those are the first things that come to mind. Experience, technical knowledge, clear, concise expectation setting up front. And then once you get past that, they will do everything they can as efficiently as they can to move as fast as they can for you. That is, I think, in a nutshell. And all of that is based on building and connecting personally, either before the deal or during the deal or after.
That's great. Well, those are some wonderful insights, Aaron, and thank you for sharing. And thanks for your time today. It's been great kind of catching up and having this conversation with you. Aaron Dorn, the CEO of Studio Bank. If you're in the Nashville area, I encourage you to check it out. It's a great new bank that's doing some wonderful things throughout this city. And Aaron, really appreciate you taking the time to hang out with us and talk a little deal making.
Thank you. Great opportunity, and always a pleasure to see your face and to chat with you.
Well, this conversation with Aaron Dorn really exemplifies that phrase that wisdom comes with experience, not just with age. And I think in Aaron, we see a leader who's been really intentional about acquiring experiences that has made him a very effective business leader. And in doing that, he's taught us a lot about how to put deals together over the last half hour or so. I loved what he said about trying to achieve clarity in what both sides are trying to accomplish in the deal. Before you jump into the positions and the terms and all of that, taking what he called the tactical pause to have clarity on what both sides want to achieve, that can be really, really valuable in terms of putting a deal together. I also loved what he described in terms of some of the barriers and some of the things that get in the way of a deal. The importance of communication and making sure that the communication is solid so that there's no misunderstandings, there's no false assumptions, but using communication as the tool to continue to drive the deal forward. Some great insights in this episode from Aaron Dorn. As we wrap up, I want to remind you of the Negotiation Made Simple live workshop that is happening April 29th to 30th right here in Nashville, Tennessee. Go to LowryGroup.net to register. We've got only a few seats left, so I encourage you to do so quickly. We have an amazing group of people around the country that will be coming into Nashville. We'll have a great 2 days learning how to put deals together, learning how to solve problems, learning how to grow your business through negotiation. We've also got a great musical experience that is not available anywhere, but is special just for you. I hope you will choose to come and be with us April 29th and 30th for the Negotiation Made Simple live workshop. Thanks for listening, and we'll see you on the next episode.